know that under section 80C, instead of 1.5 lakh rupees, 3 lakh rupees gets deducted from your taxable income? You will be able to buy 2 insurance policies and you will be able to claim benefits on the premiums for both these policies. Your exemption on premium gets doubled and taxable income is also reduced. Relax, we are not asking you to hide your income to save tax. With an ethical way also, you can disclose full income and save a lot of tax through HUF.
What is this HUF? HUF stands for Hindu Undivided Family. A family can divide its tax liability by forming a joint entity or the HUF comprising all its members. Section 2, subsection 31 of income tax treats this entity or the HUF as an individual. HUF has its own separate PAN card. This entity also files separate income tax returns and can also make tax-saving investments.
How tax can be saved through HUF? In order to reduce their tax liability, households can transfer the income earned from the properties to the HUF's account. HUF is mostly used to show the income earned from ancestral properties. The HUF gets all the tax exemptions that an individual taxpayer is entitled to. This is coming from the deductions that one gets on all types of investments under section 80C to the standard deductions also.
Now let's see how Rajiv reduced his tax burden by forming HUF. Rajiv's annual income is 10 lakh rupees. After deduction of standard deduction, the taxable income comes to be 9.50 lakh rupees. He is earning 6 lakh rupees from the rental income from his ancestral house. After deducting the standard deduction of 1.08 lakh rupees from his rental income, the taxable rental income comes out to be 4.20 lakh rupees. Rajiv's total taxable income was 13.70 lakh rupees. His taxable income further gets reduced to 11,95,000 rupees after getting further deduction of 1.50 lakh rupees under section 80C and 25,000 rupees under section 80D. On this, the tax will come out to be 1,77,840 rupees under the old tax regime. Whereas, when 6 lakh rupee rental income is showed as income of Raji's HUF. In addition, after adjusting the standard deduction of 1,80,000 rupees and other deductions of 1.50 lakh rupees under section 80C, and apart from the health insurance premium of 25,000 rupees under section 80D, the taxable income of the HUF will be 2,45,000 rupees. The tax on this amount will be nil as the tax is levied on HUF only when the income is in excess of 2.50 lakh rupees. When this burden of rental income is removed from Rajiv's total income, he will have to pay a tax of 70,200 rupees. This also includes the cess levied on his income. Now, the tax liability of Rajiv's HUF has been reduced from 1,77,840 rupees to only 70,200 rupees. In this way, Rajiv has saved tax of about 1 lakh rupees.
How to set up HUF? Any Hindu family can come together and form an HUF. Buddhists, Jains and Sikh can also form HUF. But it cannot be made by an individual. An entire family is required to open an HUF. Descendants of a common ancestor, that is, people of a particular family, can form an HUF. The head of the household is the Karta of the HUF. Any man or woman can be the Karta. The family members on the basis of their birth are called coparceners of the HUF, and those who join after marriage are called members of the HUF. For example, wife, children and the wives of the children can all become members of the HUF. According to the law which was amended in 2005, daughters can remain coparceners in the father's HUF after marriage, but they will only be able to become a member in their husband's HUF. The HUF has to be formally registered and the details of the names of all the members have to be mentioned in the HUF deed.
The HUF does not have a salary, so the combined income of the family is considered as the income of the HUF. Income from common ancestral property or its sale or the rental income is treated as income of the HUF. All the properties of the family is showed in the name of the HUF and tax is levied on the earnings showed in the HUF. These properties are transferred in the HUF as gifts or as inheritance. Tax expert Gauri Chadda says that a common mistake that people make in HUFs is that by gifting something to an HUF, they think they can reduce their tax liability. But if the HUF gets any income from this gift, then it gets added to the income of the member who has given the gift. Money9 suggests, HUF helps in reducing tax, but it does not mean that you can use it for tax evasion by transferring your gift to an HUF or by transferring properties which are in your name to the HUF.